2, baby. It's just 2 minutes. Your 2-minute tax tip starts now.
Okay, hey, listen, we got an interesting topic here today. It's one that I've been getting comments through our YouTube channel about how to convert an existing C-Corp to an S-Corporation, or honestly, maybe vice versa. Let's say you're an existing S-Corporation and you want to make the switch over to a C-Corp status because of what Trump has done through the Tax Cut and Jobs Act. Now, I'm sure you're proud of yourself, right?
A lot of us are really smart. I'm really smart.
That's right. I'd like to thank those who brought it to my attention that you'd like to see some videos about how to convert from a C-Corp to an S, or quite honestly, the pros and the cons, the disadvantages or the advantages of switching from a C-Corp to an S, or vice versa, switching from an S-Corp to a C. This is a topic of conversation because of the Tax Cut and Jobs Act, or the Trump tax reform that he passed. This has drummed up a lot of content about should existing C-Corps and S-Corps make the switch in the other direction. So what I want to do in this video is break this down and make sure that I give you a lot of the higher level pros and cons, disadvantages or advantages of switching from a C-Corp to an S, or from an S to a C. But at the end of the day, you're going to want to make sure you connect with a CPA or your accountant to make sure that you cover all the bases that's specific to your situation. But we only have 2 minutes, so let's dive right in. Okay, so here are the basics about C-Corps and S-Corps. A C-Corp is a corporation in which the owners or the shareholders are taxed separately from the entity. That is, the entity itself, that C-Corp itself, pays its own tax and has its own federal tax bracket. And then whenever the C-Corp kicks out dividends to the shareholders receive those dividends and claim those dividends as taxable income, which C-Corps are also known as double tax corporations. Now, S-Corporations is an entity in which the entity does not pay federal income tax, but the profits directly pass down to the shareholders, therefore avoiding this double taxation that goes on in the C-Corp world. Okay, so what are the cons of switching from a C-Corporation to an S-Corporation? Well, there's several, but I really want to hit on 3 that come to my mind as far as like the ones that are the most impactful. Okay, number 1, any unused net operating losses or NOLs. So if your C-Corp is not profitable and you're losing money, that's called a net operating loss or an NOL. Any NOLs cannot be used to offset any income whatsoever as an S-Corporation, and those losses cannot be passed down through to the shareholder. Simply put, if you make the switch from a C-Corporation to an S-Corporation and you have existing NOLs, you forfeit them upon conversion. Number 2, this is a little technical. I'm going to add some links in the description below. And number 3, one of the ones that stick out like a sore thumb, is S-Corporations limit shareholder ownership down to 100. So those are the cons. What are the pros of switching to an S-Corporation from a C-Corporation? Well, number 1, the major advance of the S-Corporation is the pass-through taxation. That is, you avoid this double taxation idea. Any profits or losses passes through the entity down to the shareholder, and they pay tax on that. Number 2, the salaries alone are subject to self-employment tax, but distributions are not. But as an S-Corp, only the salary alone pays that self-employment tax. And number 3, one of the stark differences between S and C is that any S-Corp shareholder can use corporate losses immediately after an election with no waiting period.
All right, guys, we're out of time. Oh, but wait a minute. We have enough time for bonus tip. Bonus tip.
Okay, hey, listen, thanks for hanging in there. You made it to the bonus tip portion of this video. Earlier, we just broke down reasons why you would want to or not want to switch from a C-Corp to an S-Corp. But what I want to try to do in this bonus tip portion of this video is give you reasons and reasons not to switch from an S-Corp to a C-Corp, but in reverse, right? So earlier it was from a C-Corp to an S. Now I want to give you some reasons why you should consider or not consider going from an S to a C. So here are some possible reasons not to switch to a C-Corp status if you're an existing S-Corp status. Well, there's 4 really in my mind. Number 1, double taxation of a C-Corporation. So just in general, as an S-Corporation, you're not paying double tax. The net income passes through that entity, goes down into your personal return, and you pay tax once. But if you make the switch from an S-Corp to a C-Corp, you get yourself into this double taxation status. That is, the C-Corp has its own corporate tax bracket, pays taxes on the profits, and then if you kick out dividends to yourself, you pay tax again. So number 2, there's some state income tax considerations. Now, what do I mean here? Now, many states conform to the federal tax status of businesses, and many states have, the corporate tax rate, and federally the corporate tax rates may be higher than the individual tax rates applicable to the pass-through entities. But for example, if you live in the great state of Pennsylvania, the corporate income tax rate is 9.9%, and that's significantly higher than a personal income tax rate of 3.07%. So this rate difference will likely discourage any, let's say, S-Corp owners in the state of Pennsylvania to consider switching from an S-Corp over to a C-Corp status. And number 3 here, the obvious, the impermanence of permanent tax law changes. Now, even though the federal C-Corp tax rate is a flat 21%, and that's a great thing, just based on prior history, the permanent aspect of tax law is change. It's unlikely that a different administration or Congress may increase the corporate tax rate in the future, but there is still a chance that the tax rate can go up. So if you get yourself from an S-Corp to a C to try to take advantage of this 21% flat tax rate, doesn't mean that another administration can't come in or Congress can't change their mind and then revoke it and increase the rates. And now you're in a C-Corp status with higher rates, even though you got into it with a 21% flat rate. Number 4, this is something that not many professionals talk about, but if you revoke your S-Corp status, there is a 5-year waiting period to re-elect. So if you go from an S-Corp to a C-Corp and you want to switch back, you have to wait 5 years in order for you to switch back. So you have to stay as a C-Corp for the next 5 years and then re-elect S-Corp status. Okay, so here are some possible reasons why you would want to switch to a C-Corp status from an S-Corporation. Number 1, potentially lower overall federal income tax rates. So you as an individual, if you're very successful and you're at the highest income tax rate possible, which is in the upper 30s, if you switch from an S-Corp to a C, you could potentially lower your federal income tax obligation, whatever that high mid-30 personal tax rate is, down to a flat 21%. Number 2, there's more flexible fringe benefits within a C corporation than there is in an S corporation. So for example, as a C corporation, the employer can provide health insurance or health benefits or cafeteria plan benefits. But as an S corporation, you can do the same thing, but they're limited for a more than 2% shareholder of a pass-through entity. C corporations don't have those limitations. So as C corporations, there's more flexible fringe benefits than there is as an S corporation, because an S corporation likes to limit those kind of benefits to a more than 2% shareholder. Number 3, this is a little technical. Again, I'm going to put some links in the description below, but there's special gain exclusion rules for some C corporations. There have been some special benefits for owners of small S corporations to exclude most, if not all, of the gain from the sale of the stock of those corporations. This was rarely considered before due to the high C corporation tax rates, but it's more relevant now underneath Trump's tax reform with the 21% flat tax rate. Number 4, higher thresholds for the use of the cash method of accounting. So basically, under Trump's tax reform, corporation businesses with an average gross receipts of $25 million or less can use the cash method of accounting. This higher threshold may encourage many businesses to stay or become C corporations, or the averaging of the gross receipts under the cash method of accounting. And last but not least, state and local taxes and entertainment changes. Simply put, underneath Trump's tax reform, the deduction for individual state income taxes is severely limited, but these would be fully deductible by a C corporation. Okay, that's it. Hey, hopefully that answered all your questions about whether or not you want to switch from a C-Corp status to an S-Corp status, or vice versa if you want to go from an S-Corp status to a C-Corp status. Now, like I said earlier in this video, you'll want to touch base with your professional, with your accountant, with your CPA, with your business attorney, with your financial planner, and make sure that all of your professionals are in line with your goals and your dreams and your visions of switching from a C to an S or from an S to a C. It's extremely important that you understand that there are pros and cons and going either direction. So down in the description below, I'm going to add a bunch of links that you can read and get more information about what I've covered in this video. If you guys have any questions, be sure to subscribe. Okay, that's it. Hey, thanks again for watching. Don't forget to subscribe, and we'll see you at the next video.
Thank you for
Watching. Be sure
to follow us for more
business and tax reform.
information.
Hit the button
Below to follow.
hit
The video
over there.
for more. If
Not I am going
to touch
take
your
inspect. Get
thank you
America
and
see
you at the
next
video.